Okay, so I'm going to show you how to analyze this market for V75 market, V75. So like I said, the first thing I do, I try to understand, I have to find 3 time frames, 3 time frames. That's what I'm going to find, 3 time frames. That's what those time frames are very important to me. The first time frame, I'll find the time frame, which we call the major time frame. The second time frame I'm going to find, we call it the intermediate time frame. The third time frame we're going to find, we're going to call it minor time frame. So in the major time frame, we're going to find a higher time frame which will help us with direction of the market. In the intermediate time frame, we're going to find a time frame which will help us understand the pullbacks in the market. Then the last time frame is going to help us understand the entries in the market. So in this case, I'll use a daily candle, a daily chart to identify the market direction. So the first principle before I enter any market, I have to understand the direction. And my trading will be biased towards that direction. So first thing first, we are going to identify how the market is moving. So this is how the market is moving. Okay? So if you see in a daily candle, this was the high of the market. This market broke this point. This was the high of the market. The high of the market. This market moved. It broke this low. This was our low. This low was broken and it made a new low at this point. I'm sure you are seeing this. Made the new low at this point. After making this new low, the market had to change. No, let me put them there. It's fine. The market had to change them. The market had to move again, retrace, and break this zone. It broke this zone. Let me draw it nicely so you're able to see. It broke this point. Okay, meaning the market has changed into an uptrend. It has changed its character, its form. Now it's an uptrend. We have to look for buying opportunities only. So if you see, this is now our low. Our previous low is this point. This point is our low. Okay, so meaning this becomes our demand zone. So this demand, the market moved and it broke this previous high, this previous low, which means change of character. Again, it came down and retested this point, and again, the market moved up and broke this point. I'm sure you've seen it broke this point. Again, meaning this is our significant swing low. Okay, in our case, what you know is that when the market is an uptrend, it makes stronger lows and weaker highs because the higher points are always broken. So in this case, this is our high again. This is our low here. Okay, this is our high here. This is our high here, and this is our low. Okay, we have marked. So what I do after I do this, I go to a smaller time frame, okay, to look for entries. So to look for entries, I have to look for buying opportunities only. Buying opportunities only. So for instance, in H4, it will confirm to say this market is an uptrend. It's making lows, high, low, high, low, high, low, high, low, high, low, high. So meaning this is our recent low. This is our recent low. And this is our current high, which was broken. So here, what we anticipate the market to pull back, to pull down until we see the change of character and do the entry. Remember, when we are trading the financial markets, we buy low and sell high. So in this case, we have identified to say the market is going up. It's an uptrend. It's going up. It's making weaker highs and stronger lows. Weaker highs, stronger lows, meaning this low is never broken. It's always up. It's never broken. As long as this low is not broken, it simply means that we only look for buying opportunities. When character is changed, when this low is changed, it simply means that it's change of character. So, meaning we are identifying about three structures. That's what I do. I try to identify three structures: the swing structure, the internal structure, and the fractal structure. Those are the three things I try to look into the market. So I try to dissect the market in this manner, in that manner. The first one, like I said, okay. The first one, like I said, I try to look at a swing structure. Number two, internal structure. Number three, fractal structure. So number one, we looked at the swing structure. According to the swing structure, in this case, we used our daily candle as our swing structure. Okay, we used the daily chart as our swing structure to show us swing structure, which means the uptrend. Okay, then we have used the H4 to understand the internal structure. So according to the internal structure and the swing structure, they've aligned. They're moving in the same direction, meaning the momentum is biased towards the buyers. So now I have to look now for entries. So for entries, I'll use now M15. So now in M15, I'll try to understand how the market is moving. I'll try to identify the lower lows and the higher highs. So in this case, this is my high. This is my low here. Okay, let me just put them in yellow color. Maybe you won't even see anything. Let me put them in yellow color. Sorry, you ask questions. Immediately I'm done. You ask questions, so at least you don't prolong the analysis. Let me just put it. So if you see now, this is our previous high, and this is our previous low. Okay, then the market has broken this high, and it has made this high now. So now, what we expect now is the market to break this high at 45.5221. So meaning the market should break this high. 45.52 should be broken, and this is our entry. If you see now, we are going to move because this is the demand area or demand zone. This is the market which moved significantly to break this point. So meaning this is our demand zone because this is where the buyers are focused. We are concentrating, and they are full force to break this point. So now currently we have to look for this market to be broken. Or it has been broken already. It's a buying opportunity market, but it has made a recent high at 45.5221. This is our recent high. So meaning what you do, those who use Fibonacci retracement, you can stretch this from this point to the highest point, which is 45.5221. Then you look at the reaction of the market at 50, 61, and 38. And your stop loss should be below this because you're looking for buying opportunities only. But if you check again, within this movement, there's what we call internal structure, which is happening. There's a structure within a structure and the structure within a structure. So if you check now here, the market, the way it's moving, it's making high, it has made this high. Again, it has made this low. You're seeing that it has made this high. It has made this low. Just like that, it has made this high. It has made this low. Okay, so but remember, what we're looking for right now, what we're looking for right now is just the buying opportunities. So like I said, you can stretch your Fibonacci retracement from this point to this point, and you have to look for entry points or reverse the reaction of the candles at each point. The first reaction is at 23. How did the market, has it reacted? No, it has broken down. At 38, has it reacted? No, it has broken down. At 50, has it reacted? Yes, it has made a reversal pin by this point. So it has made a reversal, meaning we are going to enter a buy here and put our stop loss here. And then we expect our TP at this point. But then, remember, what is significant to us is this now. Okay? So in this case, this is the situation, okay? M15. So our entry is here. It should grab liquidity at this point, liquidity grab. It's what we call liquidity grab, meaning this guy's liquidity is here. So this liquidity should be grabbed, and this is what we put as our TP. This is liquidity. So the market should grab liquidity, then we're going to take our money at this point. We're going to offload. Remember, we're using what we call, this is more like Wyckoff, and basically you just have to understand the market. If you don't understand what I'm teaching you, meaning what you know is useless. I'm telling you, if you don't understand what I'm showing you just now, meaning what you know is useless. You can't make money. It simply means you're gambling. You're gambling, you're in the casino gambling. You don't know what you're doing. But what I'm showing you, that's what professionals do. You need to know how to analyze these charts. You need to take your time. Yeah, you have to make sure you're on the screen good. You have to make sure, like I showed you, I did what we call a top-down analysis. Multiple time frame analysis. From my biggest time frame, I narrowed my analysis up to M15. So I checked the daily, the weekly, I went to M15 to look for buying opportunities. So this is how it is. So in this case, it's only buying opportunities. So for me, B75, I can recommend a buy. But remember, if I don't want to be stopped out, my stop loss, I would rather put it at this point, at 43.7191. That's where I can put my stop loss. But because we are, but this pullback, the pullback, your stop loss should be below at 50.1. This is why you should put your stop loss. Okay? Remember, don't be confused what I'm talking about. This is the stop loss. Okay? This is why you should put it. But if you want to, whereby you're patient enough to wait, the actual stop loss, you put it at 437,193. You know the logic which is there, because the market, this is the demand area, and it broke this point and it created this high and this low, then high, low, high. But remember, the character is not changed. It's still a strong uptrend. It's still a strong uptrend. That's why when you use these trend lines, if you use trend lines, you draw a trend line. The way I've drawn this trend line, you draw this trend line. Trend lines are, most of the people who use trend lines for trading, they are not profitable, because what you have to understand is structure of the market. When you understand structure, that's when you make your money. It's more like you've got a skeleton. You've got a skeleton. You have to understand your skeleton, then you make your money. Okay? If you understand structure, that's when you make your money. Morphology, in short, of the market. If you can't understand morphology of the market, then you can't make your money. So that's how it works. So based on this, in this case, B75, it's only buying opportunities. You can't sell. It simply means that you're gambling. You can't sell in B75. It's impossible to sell. You need to buy, only buying opportunities. Okay? Buying opportunities only in B75. So if there's any question, you can ask a question. I'll cut the recording, then ask the question. Oh, it's still fine. Ask your question. So at least we go to the next asset we can analyze. So right now, you can buy B75. So any questions, ask your questions. So at least we are here where are not clear on how I've analyzed or the B75. You can ask your question. Okay, if there's no any question, I'll go to the next asset. Okay, maybe if you say I can't hear anything, you can still type your question. I'll read it loud, then we go ahead. So B75, buy, make your money. B75. Okay. The next asset we'll look at. Okay. The next asset we'll look at is Boom 300. If you check Boom 300, I gave this signal to say Boom 300 sell, and a lot of people that made money as we are saying, we are talking. A lot of people have made money. Okay. Okay. Madam Hilda, she's saying she didn't get it because she was late. Because you are late, you can't get it. So, but nevertheless, I'm going to the next asset, which is Boom 300. The analysis, the concept is just the same. There is no difference. Is that the same? Whether I go to V75, V50, V100, whatever asset I go to count JPY, the analysis is just the same. There is no difference. That's the same. Technical analysis is just technical analysis. There is no difference. If whatever asset I can trade, you can give me NASDAQ, the analysis is just the same. So trading is very simple as that. Analysis is just the same. So go to boom 300. So boom 300, this is how I analyze boom 300. The first thing first, I have to identify a bigger time frame. Like I said, bigger time frame to help me understand the overall direction of the market. So in this case, I'll use daily candle to identify the overall direction of the market. So what's my overall direction of the market? You can even see it's making high, low, high, low, high, low, high, low, high, low, high, low. So meaning I expect this market to break this point. And this is where I'm going to grab my liquidity. And my stop loss is here. Okay? So those are two significant points. So what I'll do, I'll try to shade them with this color, so at least people are able to see. So this is our major high, and this is our week low. Our week low we expect to break. This is our week low. This point is our week low. We expect the market to break. We make our money. So in this case, we only look for selling opportunities. Never make a mistake of buying this. Keep on selling. Okay, look for selling opportunities only. Are we clear? Selling opportunities. Then I'll go to H4. So H4, I'll try to see the change of character. H4. So the market made high, low, high, low. So now, because of time, me, what I'm looking for is just for selling opportunities, change of character. I sell this market. So in this case, what I'll do, I'll just go to M15 for change of character, M15 only. So if you check M15, this is how the market has been moving. It has been making high, low, high, low, high, low. Are you able to see this? Are you able to see this? Okay, so if you see the market is making high, low. Let me do it. High, low, high, okay, high. Then again, the market came down here. Again, it made the high at this point to this point. Again, it came down to this point. Again, it made the high. So in this case, you're just watching, okay? So what is that significant to us is the next behavior of the market. So if you see the market, the way it behaved, it broke this point. Bam! So meaning here, this point is what we call change of character of the market. The market now has aligned with a major time frame, which is our daily candle. It has aligned. It's now a sell. So now we can trigger a sell in this case because it has aligned according to what we know. So in this case, we are going to sell the market at our entry is this point. So we are going to sell and we'll put our stop loss at this point. Our stop loss will be put at this point. And our take profit in this case is this point, is our take profit. Sorry, yeah, our take profit is this point. That's where our take profit is. Are you able to see that? Our take profit is at 447.695. Okay, so we are going to sell. But what you have to know is that your stop loss is at this point. Let me just label it. Your stop loss is at this point. That's why your stop loss is. and your take profit is way down. Up to your take profit is at this point. That's where your take profit is. That's how we analyze, and that's how people make millions. As easy as that, as easy as 1 + 1. That's how people make money. Okay? That's how people make money. So your stop loss is here, and then you let it run. You know the market behaves in the same manner. Low. You need to allow fluctuations. You need to allow market fluctuations. Just like that. High, low, low, high, just like that. That's how we make money. Nothing difficult, nothing complicated. That's how you make money. So if you really need like to master what I'm teaching you, okay, to master what I'm teaching you, I've got a lot of books which will guide you with all this, okay? A lot of books which will guide you with all of this which I'm showing you right now. It will guide you all of this. What I'm showing you, it will definitely guide you. Very simple and so straightforward. It will guide you. There's nothing complicated about trading. It's easy as that. It takes years for somebody to realize this and to make profit. Some people can even take you 10 years. You don't know. Okay? Anyway, let me move out from this. Any questions? Any questions, clarification? Kindly ask me Kamtuka to mute his mic. There's a feedback noise.
Hello. Thanks for hosting the meeting.
All right. You're welcome.
Can you hear me?
Yes, I can hear you, sir.
Yes. How can we access this video? I'm not very good with books. I prefer videos. How can we access this video?
Okay, let me just
the duration.
Okay, it's fine. Let me just upload it on YouTube. I just load it for people. It's okay. It's in recording. It's still
okay, fine.
Yeah. So just try to master what I've taught you. It's not, trading is not difficult. It's very simple. You know, if you start with $100 and you consider risk management, whereby you know to say, okay, this retracement from this point, from this entry where I've entered from, the character has changed. The character of the market has changed. Meaning it was red, it has now turned into yellow. What do I do? The character has changed. So meaning I just have to understand now this movement from this point to that point, okay? From this point to that point. If this retracement, the market ate this stop loss, it went against me up to this level, this point. It went against me from my entry to this point, entry. How much am I willing to lose up to this point in case the character again continues going up as a pullback? Because already in this case, we have identified to say this market is a downtrend. So now you ask your question to say, if this market retraced up to this point, how much am I willing to lose? You ask yourself, like for instance, if you say, okay, I'm willing to lose the $10 at this point, meaning your risk reward ratio is $10, but try to see where your TP is. Your TP is up to this point. If you calculate the risk reward ratio for this is like, if you calculate the risk reward ratio is like, if you calculate like 1, 2, 3, more like 1 to 3. So it simply means that if you are willing to lose $10, you make $30 on top. If you are willing to lose the $1,000, you'll be able to make about $3,000. You try to calculate that risk reward ratio. Calculate that risk reward ratio, then you make your money. That's how we trade. But the problem is that when we spot this entry, instead of us measuring the movement from this point, this retracement to that point, instead of us measuring this retracement, we just try to enter with every lot size, whereby just this minor retracement, it will blow off your account. That's why we lose money, because of greed or miscalculation, or we don't know what we are doing. But if you're able to calculate, you're able to manage your risk properly. You say, okay, from this point to this point, meaning what you're doing is business. It's not a gamble. Gambling and business are different. Gambling is whereby by lucky, it will continue going down without spiking or without a retracement. Remember, our entries, always remember, when I'm trading this, I try to identify 3 structures. The first structure is called the swing structure. The second structure is internal structure. The third structure is the fractal structure, where I do my entries from. That's what I do. So even you, the same way, that's what you can do. But otherwise, this is what you do, and this is how we make money on the financial markets. Otherwise, that's it. If there's any question, clarity, you can always advise. I think we are done for today. We'll continue, we'll do another analysis on currencies before the day starts, so at least we can make money as well. Early morning, I'll do analysis and upload on YouTube channel, and you see live analysis almost on a daily basis, both for boom and crash. And then I'll tell you each day the opportunities you're going to look for. So buying opportunities, I'll lay properly the foundation to say, look for buying opportunities. There are selling opportunities, I would advise to say, look for selling opportunities every day. Imagine for 31 days, we'll be uploading videos. Otherwise, thank you very much, and let's keep trading. Thank you.